It's interesting. I'm not a big conspiracy theorist, but I will say the media bias is unbelievable. I mean, I saw
Mhm.
articles covering Tepper and Loeb today, and they basically covered every stock in their portfolio except the fact that they both dramatically increased Alibaba. It was kind of mind-boggling. Brett, that what we've often found is that China has a real estate problem. Real estate problem gets ignored. Problem happens. Government says, "Okay, we got it contained." Problem's not contained. New real estate problem emerges, government panics, does massive stimulus, and we're off to the races. So I think we're close to the latter part of that story that continues to replay.
Welcome back to part two of my interview with Mr. Tom Hayes, and this one will be about what's going to happen with the real estate sector in China and therefore what implications may this carry for stocks like Alibaba, which we'll also be discussing in this interview again. And then third, about Chinese stimulus and what's possibly the reaction by the Chinese government to what's going on in the Chinese economy. So watch this video till the very end to get updated on all of these matters. This is already part two of an interview that was 50 minutes and the first part was already online. Now, if you want to see the whole video in just one chunk, you can go to my Patreon and support this channel, but also get the whole interview. But by now, you can also just hop over to Hedge Fund Tips on YouTube and also get the full version. So you can either choose to support the channel or you just go and watch it. But I also thought I'm going to split this video into three sections. The first one was mostly about Alibaba. The second one now is about those topics that I just mentioned. And the third one will be more specific about Alibaba Cloud and will be published tomorrow. And therefore, make sure to be subscribed to this channel because otherwise you may miss out on such topics and you may not receive a notification or my video on your front page. And I hope this is relevant and interesting for you guys to watch. So let me know in the comments what was your key takeaway, what is your personal opinion about these matters, and then let's hope that everything works out in the end and we'll get a happy start into the next week with all of the issues that are at hand and that we have been discussing here. Thanks for watching and now have fun with Tom Hayes.
When you think about what the sum of the parts of this business is worth and why would we have such a level of confidence, in our conservative analysis, whether it's 3 years out or 5 years out or 2 years out, we think this is worth 280 to 320 when you add all the pieces back, and it could be worth a lot more if we get aggressive. And why we feel that way is not based on emotion, it's based on data. And the one thing that we saw since 2014 is you had revenues per share and cash flow per share up 500% each. I'm sorry, revenues per share up 800%, earnings and cash flow up 500%, and the stock price has done nothing. I've only seen one instance of this in history where it's been such a prolonged increase in intrinsic value without an increase in price appreciation, and that was Microsoft did the exact same thing from 2006 to 2013 when they doubled their revenues, they grew their cash flow per share by 200% and their earnings per share by 120%. The stock price did nothing, but in the subsequent 7 years, it was up 1,500%. Not because the performance went up in the subsequent 7 years, it actually did about the same thing, but because it's pushing the beach ball underwater. You can only hold the ball underwater until that intrinsic, once you let go, the intrinsic value is realized. And when it comes all at once. And Alibaba will be no different. The difference is they've grown the intrinsic value orders of magnitude greater than Microsoft did over that 7-year period. And when this thing goes, no one's going to be able to catch up. And there are a few smart people joining the Alibaba train, as we saw in the public filings last night. David Tepper is one of the best in the business. A huge history of buying things when others aren't interested. He dramatically increased his position, as did Dan Loeb. Between the two of them, they now own $617 million of shares. So it's nothing to shake a stick at. I think with Loeb, it's call it a 4% position. And I think with Tepper, it's a 6 or 7% position. So it's material.
Wow, yeah. The sentiment or the reply and feedback that I get on social media or in my investors groups, for example, my Patreon, is that everybody sees those numbers and saying that, but still the share price doesn't go up, just the other way around. So what do you respond
Yeah, well,
to those.
yeah, everyone saw the numbers for Microsoft from 2006 to 2013, and no one could figure it out, and everyone was buying them. Everyone saw the numbers in 1998 to 2002 when Buffett was buying value stocks, and everyone was saying he's lost his touch and he's an old man and he doesn't know any better. And then in 2000 to 2002, when everyone got shellacked and was down 80, 90%, he was up 50, 60, 70% a year. So I think what it comes down to is the simple maximum in the short maximum in the short term. The market is a voting machine, and in the long term, it's a weighing machine. In the short term, all the feedback you're getting, Marcel, is on the basis of emotion and people day trading or going on leverage or doing stupid things. But in the long term, if you own a piece of a business and you know that the underlying business is appreciating, it's just a question of waiting. And sometimes playing golf. I don't know if you remember, I did that interview with the CIO of Legatum and the two guys from Sovereign, Chris and Richard Chandler, who took $20 million and turned it into $5 billion over 2 decades. And they would buy these type of things, when groups were dramatically out of favor, whether it was Russia in the 90s or Brazil or Japanese banks in the 2000s. And, they would buy huge positions. Sometimes they would go 50% against them before they went up 3 and 4x. And what they did while they were waiting was, number one, no leverage. So they didn't care how long it took. And number two, in the case of Richard Chandler, he would go out and play golf and learn to speak Italian and take his mind off of it. Because if you owned, a couple hundred apartment buildings, Marcel, and they were worth, maybe you paid $30 million for them 10 years ago. But over the last 10 years, the rents went from, call it 10 million a year to, and I'm just cuffing numbers here, but 10 million a year to 80 million a year. And people were still offering you $30 million to buy your apartments. Would you sell them?
Yeah, no.
But that's exactly what's happening with Alibaba right now. That's the thing is that revenues are up 800%, and it's trading at the same price that it did some 8 years ago. And all you can do in those type of situations is just say, and more important than anything else is the free cash flow. Alibaba generated $25 billion of free cash flow. Their cash flow this quarter alone was up 76% year on year. This is usually a weak quarter. They did over $5.4 billion of free cash flow. And people are wondering, is the business okay? I mean, is the business okay? In theory, in actuality, it's better than ever. And in reality, wait till the stimulus comes and wait till things normalize. They just opened the country from COVID 6-7 months ago. It takes a little time to get some momentum. They haven't put money in the consumers' pockets yet. We think that's going to be forced to come. And I think Brendan Ahern said something very interesting a couple of days ago. He said that the Shanghai Composite at 3,200 and the Shenzhen at 2,000 has been when policy support has been aggressively announced in the past. So, again, you could wake up tomorrow, you could wake up a year from now, but it's coming. And the key is your apartment buildings continue to grow their revenue. They continue to grow their cash flow. So the only question is, when is someone going to offer you $240 million for that apartment package that you paid $30 million for 8 years ago?
Right. Before we talk about your expectations of the coming stimulus, or we can debate whether or not this is coming, I want to know from you which camp you're in currently regarding the more macro views on China, like the economic data is coming out. Are you in the camp that it's really bad and that's why we need a stimulus? Or do you think maybe there's also a little bit of exaggeration and focus on the negative points when it comes to the media bias? Where are you here? Where do you think is the truth?
It's interesting. I'm not a big conspiracy theorist, but I will say the media bias is unbelievable. I mean, I saw articles covering Tepper and Loeb today, and they basically covered every stock in their portfolio except the fact that they both dramatically increased Alibaba. It was kind of mind-boggling to me. If I read the headlines, I mean, it looks like China is going off a cliff and never come back. If I listen to the companies doing business in China, they couldn't be more excited about the last 6 to 8 weeks progress in the country. Like they're saying the consumers coming back in leaps and bounds, whether it's Wyndham, I think it was Wyndham Hotels, whether it's MGM China, whether it's Alibaba itself,
Disney as well.
Starbucks, it's just the list goes on, and the common denominator is in the last 6 to 8 weeks, things are going straight up. So Yum China. So I continue to be more interested in what the companies have to say than what the headlines about biases towards particular region. And look, there's reason for biases. I mean, there are problems, there are leadership problems, there are a lot of mistakes made. The problem is the machine is so big, even though they're working 24, they worked 24/7 to kill it 2 years ago. They couldn't kill the machine. It's just too strong. And I think that's going to persist. And it's certainly going to persist. Our base case is for certain for the next 3 to 6 years. I think we're going to have one more parabolic run in China. And then I do believe all the theses that China will be the next Japan, in the sense that they do face an aging population. They're not having babies. They don't have immigration. But historically, if you look back over the last 100 years, what you're going to find is that all the countries that had a large portion of their population between 30 and 40 always had very strong economies and very strong stock markets as a result throughout the last 100 years. You can't find an instance to disprove it, meaning I defy you to find me a situation where the country had the largest portion of their population aged 33 to 40 and the economy and stock market didn't go straight up. So we have that situation in the US, but they also actually have it in China. They've got certainly the older group, but the echo boom, like we have in the US, we call it the millennials. So the Chinese millennials are average, 33 to 36, which implies, based on housing formation, family formation, consumption years, earning in those years, that the vast majority of the spending in one's life happens in that period from 33 to 40. That drives the bus. And then I think after that, they're going to have a real demographic problem, and they'll probably go through a lost decade or two like China did. But in the meantime, when the music's playing, you got to dance.
Or Alibaba solves all the problems and issues with artificial intelligence. That would be also a good case.
Exactly.
What do you make about those issues in the real estate sector? We've now have I think, number 2 in China real estate defaulting, which is quite unsettling some of the investors lately. And hopping over to also the yields and the US dollar strength, did this surprise you that we still don't see those big indicators tumbling over and reversing back down?
I can't remember a time in the last 10 years that China didn't have a big real estate problem. So maybe this time is different, but I wouldn't hold my breath. What we've often found is that China has a real estate problem. Real estate problem gets ignored. Problem happens. Government says, okay, we got it contained. Problem's not contained. New real estate problem emerges. Government panics, does massive stimulus, and we're off to the races. So I think we're close to the latter part of that story that continues to replay on autopilot. So the worse the headline gets, the quicker they're going to act. And I think that's where we're at. We're right at an acute phase. What I can't figure out is whether Xi is going to require 2 million young kids to go on the street and call for his head before he actually shoots the bazooka. Whether he's intelligent enough to do it proactively, or he's going to have to do it reactively like he did with COVID. That's the only issue at play. And the second question you had was?
That quite recently the yields were still rising.
About the US dollar. Yeah. US dollar and yields. Yeah, I think this is kind of the final blow off. I mean, we're at or near the end of the Fed's tightening policy. More and more people are predicting that there will be cuts in the first half of next year. I'm not so certain about that, but what I am pretty clear about is that they have all the cover they need to get out of the way. And even though our rates are high, the key is we're going to be stopping our tightening process before all of our peers. So on a relative basis, we've had this counter trend bounce in the US dollar after collapsing since October, which, as you know, we were very vocal publicly in October that the dollar was going to roll over. Yes. Sure enough, it did. And within months, Alibaba went from 60 to 120, or maybe it was weeks. But once the dollar weakened. So we had a counter trend bounce on the debt ceiling debate, and now we're having a counter trend bounce on this new type of uncertainty. But the end of the day, you got Jackson Hole, and then you've got September. I think in September they'll come out and say we're going to skip again and wait for the data. They'll never say we're done. They'll never declare victory, but more likely than not, they'll say we're done. The dollar can resume its downtrend. I think the big surprise of the second half of this year, which goes completely counter to what everyone is thinking today, with yields blowing out a little bit in the short term, is that the 10-year is going to get bid and yields are going to compress to the low threes. And that's going to be the shock. The dollar weakness, the bid in bonds is going to be the shock. And that's going to be a huge catalyst and growth driver for flows into emerging markets. You just have to keep in mind, it always looks darkest before dawn. Whether it takes 2 years to bottom out like it did from 2015 to 2017 before it went straight up in 9 months, I don't think it's going to take quite that long. I think we're kind of there, and now we just have to determine in terms of sentiment and emotional voting machine in the short term. Do we go back into the 80s before we shoot up to 100, then 120, then we'll rest up there, and then up to 180? Is that all going to happen before the end of the year? I think it's possible. Or is it going to take another 6 months? And that's just going to be dependent on is Xi proactive. If Xi is proactive, then we're going to be off to the races. Or is he reactive? Then it's a question of when did 2 million kids go in the street and call for his resignation, like we started to see in COVID. And I think we're there, because the last thing you want as a leader of any country is angry, educated young people with a lot of energy in the streets. Nothing good happens, and I think they realize that, and I think they're praying they don't have to do the bazooka, but I think all things point toward it with the real estate issues that you pointed to. But I also think that the surprise, when you listen to business by business and how they're doing, is that I think the surprise at the end of this year is, it's going to shock people, is that China does end up exceeding 5% GDP. And everyone's going to say, how the hell did that happen? I thought things were so bad. Well, listen to the companies, listen to what's actually happening in the business, avoid the headlines, and follow the smart money. It's nice to see it. It was a little lonely. No one wanted to touch it down there with us at 61 and 78 and all those areas that were just like, hang in there, ladies and gentlemen. Your building is still growing rents. Don't sell the building at a low price. It's worth 8 times, 5 times more. And then, it goes straight up, and then everyone chases it on leverage after 100% run. They get their faces ripped off. And, the answer is just own a high quality business and wait. You can't control when it's going to happen, but if you've done your work and you understand the intrinsic value and the business is unimpaired, or in the case of last year, it was temporarily impaired for a few minutes because of the crackdown. And you could look through that and understand that ultimately the government does what's in their best interest, even if they exhaust all other possibilities first. Then you can step in when it's a little noisy and a little bit emotional, like it is right now.
It seems like everybody is kind of really waiting for this trigger of stimulus, right? So let's be a little bit more specific about, for example, your personal expectations in which area, because, for example, I'm a little bit skeptical, to be honest, like if it will be, the kind of stimulus that we are all waiting for. I think China currently, first of all, thinks that it's not as bad as many describe it out there. And second of all, I think they are not going back to the old growth model of, for example, helping out real estate or just, getting growth. You just mentioned it. It's, by the way, around 30% of the world growth, right? Around 12 trillion, I guess. So I think China's not going to go back to this model and just building more houses in order to show those growth figures. I think it's going more into new initiatives, into technology. I think Alibaba will also benefit from that. But help us understand, like, what signals are you waiting for? Like, when would you say, now this is the stimulus that we've waited for? Or maybe investors, maybe you can speak on behalf of general investors.
That's a great question. But so if I was 100% certain, why wouldn't we just be 100% in Alibaba, or leverage one time and 200% in Alibaba and forget the rest?